Today is Saturday, May 23rd. This is the video for Friday, May the 22nd. And the first thing that jumps out at you is the extremely low volume. Now this could be because it was a long weekend and the traders just quit in the afternoon and made it into a 3.5-day weekend. But you can see that the Dow touched its close of the prior day, moved down, and then drifted higher the rest of the day. NASDAQ much the same, S&P 500 much the same, but the volume is what's concerning here. If we look at our oscillator figure, our oscillator barely budged, but the thing is it budged to the downside. So technically we have one lower high, two lower highs, three lower highs, and 3.5 lower highs. So this is what our stacked volume looked like. We haven't seen volume this low going all the way back to pre-COVID-19 days. This is early February. And it was just declining volume all week. If you look at the advancers to decliners, though, there were more advancers than there were decliners. In fact, there were 1648 advancers, 1275 decliners, but look at the volume. The volume in the declining stocks outgunned the volume in the advancing stocks. So some mixed signals there, but basically telling you that the bulls were a little bit in control today, and it may not have seemed like it because the market was higher. And a little deceptive. Let's take a look at the S&P. Now, one thing that I missed and hadn't been showing you is that this resistance right here was at the bottom of a gap. This is a gap that occurred back on March the 7th, and I hadn't pointed that out earlier. I was more focused on the Chiku span and the 200-day moving average. And then when I looked to the left, I saw this gap in here. We stopped at the gap. We retreated from the gap on Thursday, and we came down to test the 200. So look, we're right in between the 200 and that gap, and that's pretty much where we stayed on Friday. We said that we were coming down, but we're coming down to see if there's support at the 200, and if they can break the resistance at this gap, then the market should move higher. Now look at the Chiku span. The Chiku span also ended the day right at the 200. So we had been watching that as one of our signals, and there you go. Now there's a very little resistance. Once it gets past the 200 on Monday, it'll run into the cloud. On Tuesday, it'll have nowhere to go except through the cloud. Doesn't mean it can't drop. The Chiku span can't drop quickly. But it's going to face the cloud on Tuesday morning. Apple 319, still just trending at its Gartley pattern high. Caterpillar lost the cloud. We said to look at it here. The cloud was providing very little support. It's just too thin. And what happened is it fell through the cloud, got a bounce off of the 8 EMA. The Chiku span found its support on this candle here. Actually, it's in the candle a little bit, closing the day right here. So the Chiku span is inside the candle, but it's going to come out tomorrow underneath, on Monday rather, underneath these candles and smacking into the cloud for additional resistance. So we can't count on Caterpillar to do anything for us at the opening part of next week. Cisco, just resistance at the 200, but overall continuing to trend higher. The 200 is also resistance on the Chiku span here. Home Depot is the stock that we're looking at very carefully. It goes ex-dividend on June 3rd. So I've rolled quite a few of my I rolled my puts and my short calls into next week and June the 5th. And I was able to get enough premium rolling them into June the 5th that should my stock get taken away from me I won't be eligible for the dividend, but I will have collected a premium equal to the dividend, and I'm okay with that. Plus, the stock also has to move up to 250 to get taken away from me. So there'd be a gain here of $9 plus the $1.50 on the premium for the short calls, and they can take it away from me. NVDA continuing to be strong, but continuing to channel. Found support here on the gap. That's a good sign. Should be moving higher. Global Payments Network did not keep its support on the gap and has now fallen into the gap. And really from this point on, it should seek to close the gap. If you're looking to buy this stock, the opportunity to buy it would be at the bottom of the gap, and that's why we have this green arrow there. Whirlpool, still not doing very much. Gold Miners has fallen down. Looked like it had a breakout over this trend line, but it fell back. FSLY, complete reversal. Certainly, and a lot of selling. Given the day that was low volume, you had corporate selling happening here. So this might be an opportunity, if you're in SLY, to put a stop below the 8 EMA, or watch it, put an alert on the 8 EMA and watch it, and see if it gets support, and may resume higher. But this is going to be a critical stop point right here, 39.77, just below $40, and sellers will probably start piling in, because look at the profit that they've made since earnings. Netflix, again, just trailing this C point of a shark pattern. This is confirming that this is a valid technical point here. When you have a harmonic pattern and price sticks at it for 1, 2, 3, 4, 5, 6 days, it's a valid point. But the problem is, it's C and D is down at 146. I still don't believe it. But that's what the technical pattern is saying. What it means to me is that you would not buy Netflix, or not even go near Netflix at this point. In fact, if you have Netflix, now's a good time to take some off and wait for it to break over 450. Coca-Cola, nothing. Amazon, still a strong stock. Disney is reopening its parks, I understand, but the stock isn't doing anything. And the Chiku span definitely getting resistance right there on the cloud. There was the top today. If we take this line and bring it down here to the top of Friday, where are we? The cloud, Chiku span on the cloud. It's so important to watch this. So that's all for today. Where are we going next week? Let's look at the S&P now on a weekly basis. And on a weekly basis, the S&P is still in the cloud, just above the 200 daily moving average. So it could easily ride up in the cloud. The Chiku span's next resistance next week is going to be all the way up here at 30.30. So there's a possibility that the market does go higher next week. Looking at the chart, but then when you look at the McClellan indicators, you get a different signal. The oscillator would seem to be on its way down, but there's not much of a difference here. So overall, I'm positive next week. I think next week may be okay. It'll depend what the news is on the reopening economies. So keep your ear to the news on coronavirus and reopening of the economies.